afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank out of Singapore, is our guest today. Now, Vishnu, as always, great to have you on the show.
My pleasure to be here, Brian. Thanks for having me.
Now, Vishnu, before we get your insights, we're going to take a look at crypto markets and then regional equity markets. We start with Bitcoin, which is at 21,868.1. It's down 2.36%. Ethereum is at 1,517.56. It's down 2.81%. Looking across to regional stock markets, the Straits Times Index out of Singapore is up 0.32%. Bursa Malaysia is down 0.06%. Shanghai is down 0.73%. The ASX All Ordinaries is down 0.14%. The Nikkei is down 0.8%. The Hang Seng is down 0.81%. And rounding up the numbers, we've got the Kospi, which is up 0.73%. Vishnu, what's your view on market performance in the first half of the day?
It does look like markets are somewhat cautious. As we can see, the reds outnumbered the greens. And that tells us it's a cautious note. Few reasons for that. One is, of course, this week the main event is the FOMC. We're heading into the FOMC, and even as markets have scaled back on the rate hike expectations, like we recall that post CPI, which crossed 9%, markets were looking for 100 basis points. They have since scaled back to a 75 basis point, but I think there appears to be some, and justifiably so, some caution around the precise messaging around the Fed and whether that can soften markets somewhat. So that's one aspect of it. The other is the PMIs for the Eurozone also fell more than expected. So basically, if you look at the composite for the economy or the manufacturing, both fell into contraction, suggesting that the impact of the Ukraine war from the supply side shocks is coming through. And more importantly, this may be the beginning of it rather than the end of it. So markets are also cautious about that. So there's that particular dissonance between the ECB doing a 50 basis point hike last week and following on to say that they will hike for as long as they have to. But clearly, the Eurozone PMI suggests they may not be able to hike as high as they have to. So therein lies the dilemma for the ECB. And finally, I think China has been a bit of a mixed bag. There were whispers and reports, albeit not really official, that a liquidity backstop is going to be set up for property developers. But I think the quantum involved in the lack of detail, or rather the small quantum involved in the lack of details, has markets more cynical than convinced. And for those reasons, you can also see why Shanghai and Hong Kong are down. So there appears to be overall a sense of caution and better safe than sorry kind of approach to markets as they head into the FOMC.
Now, Vishnu, in your commentary today, are there any other key points that you've highlighted that perhaps you'd like to share with the audience?
Yeah, I mean, there's one other point that's worth noting as we get into this entire cautious mode and things like that. One is so I'm just going to touch on two in particular. One is how markets start pricing in recession risks, because clearly as the ECB has stepped up more than expected, and the Fed remains convincingly hawkish, even as they are assaulting inflation, invariably they end up also denting growth. So the recession fears, how markets price that in, whether they price it in as a relief based on expectations that policy will pull back, or they price that in as a downside risk, given that they may be fearful that central banks may not be able to undo the damage that they've done. So that's one thing worth noting. The other one is last week, as we anticipated, dollar bulls scaled back somewhat, and that set a backdrop of firmer currencies elsewhere, including in EM Asia. But I don't think we should lose sight of the fact that we are perhaps not done with the downside risks to the currency markets. And if that's the case, the other thing that we cannot lose sight of is how quickly central banks burn through their FX reserves. For me, the cash burn risk, so to speak, remains a prominent one, even if
now, Vishnu, I want to interrupt you there, and I need for for you to explain that in a little bit more detail, because that's a point that the narratives around media have not talked about, the cash flow risks associated with central banks. Could you please elaborate?
I'm happy to. I mean, so one of the main sexy headline out there is Asian central banks, Asian central banks have built up FX reserves significantly, such that the resilience of currencies is much greater today. And that's being used to explain why currencies have not fallen so much during this sell-off. If you look at the starting point and where they are right now, and I don't take anything away from that. It is a factual truth that whether you compare pre-COVID or compared to the taper tantrums, FX reserves have generally been built up quite significantly. Whereas the nuance that I want to bring out here is that this is a deterrent against speculation, and as all deterrents go, is best when it's not used. Trouble is when it starts getting used, the real issue then is how quickly are you burning through it? And if markets start fearing that you can burn through very quickly what you took really long to build up, then you can get back into that kind of adverse loops where the currency sell-off causes more burning of FX reserves to protect the currency, and that in turn, the fears of that burn in turn sees more speculative sell-off. So that kind of an adverse loop is best avoided, but sometimes, to be really frank, out of the control of the central banks, because the Fed sets the stage and many a times also scripts the outcomes.
Now, Vishnu, that's something very pertinent that we all should be watching for and keeping in mind. Thank you very much for your insights, Vishnu. That was Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our various social media platforms, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.